Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, August the 20th. The year's 2024. Let's talk trading. Trading with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. Walmal, let's see, the last time we were talking, I think there was did I call a short? I can't remember. Because I think it was a few days ago, and
Yeah,
I think
you were saying you were saying it was going to go down to a level. I can't recall what that level was, though. To be honest with you,
yeah.
and it got within probably about 10 pips or so of it. Didn't
Well,
quite get there.
well, I think we were actually calling out a trade, and we ran out of time. But I do believe we might have gotten close to what I had said, but I don't remember off the top of my head.
Yeah, I don't recall exactly. I do know that it got close. Close. Like I said, it was a long range type of thing, and it got within 5-10 pips, and you say, "Oh, it's a long ways away." No, it's not.
Yeah.
Not when you think about the fact that since the last time we did a video, we're now sitting up here at $1.30.
Yeah.
Back then we were somewhere in the range of $1.27. We're up 3 cents, or or another way of looking at it is hundreds of pips.
Yeah. Oh, by the way, I changed something on the frequency distribution display. Instead of doing the high minus close, I did high minus low, looking at the ranges. And over the last 100 days, we've had 73 days over 50 pips of range. So that's kind of pathetic.
Yeah, yeah. If you look at it right now, we got 56, 69, 98. That was a good one from 3 days ago or 2 days ago, and then 73, 54, and then of course we got to 115, but that was an NFP day. Was it an NFP day? No, it was not an NFP day. It was some type of big news day, no. But still, it's just so compressed. And then you were mentioning yesterday to me about how big the ranges are on the yen pairs.
Right. Well, we had that a couple, let's see, from 10 days ago to 13 days ago, we had 4 days in a row of better than 100 pips. In fact, 3 of those days were over 130. But looks like we're back to the small ranges again.
Yep, exactly. I think I think that's kind of part and partial. But you got to remember today and yesterday also there was no real news that was out there that would drive this. There's supposed to be some news coming out, in the next couple of days, and that should help it. Hopefully, it'll help it move it along a little bit, get those ranges up. So because, and the thing is, you can still make money. I say it all the time. You can make money even in these compressed markets. The thing is, it's just a little bit more difficult, and the reality is that because it's a little bit more difficult, you got to work a little bit harder, and they have to work a little bit longer because it takes longer to get and cover that ground. And so wow, if you don't want to work, right?
Exactly.
It's like I'm looking right now at the news, and we'll have some red news tomorrow afternoon, but that's going to be well past the time I trade because it's just the FOMC meeting minutes. It's coming at 2 o'clock Eastern time tomorrow.
Yeah.
Then Thursday, yes, sir.
No, I was going to say, go ahead.
Oh, okay. And then on Thursday we got a ton of news. Friday we got a ton of news. So hopefully, after we get past tomorrow, and we'll have a bunch of news. Now remember, this is also we got day one of the Jackson Hole symposium starts, where all the big mucky economists who know everything about the world and how it works, right? They're all meeting and having their la-di-da meetings and everything to tell us how great things are or not. And so The thing is, though, when they talk, sometimes, you got to be careful. Because normally a lot of these guys talk and nothing happens with the market. But with these guys in Jackson Hole, when they talk, because so many people respect their opinions, it does move the market sometimes. You got to be careful.
Yeah, and right now we're 7 pips off the no, off the daily high, and it looks like we're 22 pips off the yearly high. So we're closing in. Looks like.
Yep, I would agree. So you got to be a little bit careful with these. It's actually good in one sense, but at the same time, you got to remember it can be dangerous trading those things if you're not aware that these things are coming up. It's not dangerous to trade them necessarily. It's dangerous if you don't have them, in the forefront of your mind of, hey, this is a potential where we can get some big movement here, and you're not paying attention as to what's going on. That's when it becomes dangerous.
Right.
Not the actual. That's the fact that the line is in the sand. It's the fact that you're not paying attention to the line in the sand. Because, you always have an out. Remember, you can always go next to the trade or not get into the trade because of a particular thing.
Right.
Or get your finger on the button saying, okay, when I say finger on the button, I don't necessarily mean your fingers on the mouse button. In other words, you set up lines in the sand yourself, saying I'm not letting the price get past here, or I'm going to do this if the price don't move past this particular line. So have a plan and then trade the plan.
It's something that a lot of people say, and a lot of people struggle with the plan. And it seems to me that it's usually they are focusing on the entry, and they, for some strange reason, have a hard time accepting the fact that if price moves up to a line, you go long. If price moves down to a line, you go short. If that, when you're looking for an entry.
I kind of agree with what you're saying there. People do struggle with that, and I find it kind of ironic. And the reason why I find it ironic is because when you really get down to it, you look at every method that's out there. I don't care if you're doing squigglies, you're doing, order blocks, I don't care what you're doing. Eventually, what you wind up doing is drawing a line on the chart where you say, if it goes into this area, I'm going to go and do X. So the reality is all their methods actually go and do that. Yet at the same time, you'll get criticized by saying, if you are just going to go and trade horizontal lines, and that, somehow there's something wrong with that. I never understood that attitude, but that's just me.
Well, it's the life complication theory, which I guess we could paraphrase it into the trading complication theory. Trading is simple, but people tend to complicate it.
Yeah, I think you're right. We somehow we feel, this is going to come across arrogant, maybe, but it's not meant to be. And that is that, there's a group of people out there, and I'm going to say it's probably the majority of people, that if they don't go and develop their own complicated system that they can put their name and stamp on, and then it can't be accurate. They've got to go and, it's sort of like the sky is blue. Well, no, it's not really blue, it's azure.
Actually, it's purple.
Yeah. So, but people do that, and it becomes, well, I've said this to you since the very first day that I met you, and that is that my whole idea of trading is keep it simple, stupid. You know, parse things down as much as you can. Eliminate all that other stuff as much as you can. You know, and I'm not saying that, you know, that tools can't help you, because they certainly can. But at the same time, I don't need to go and have, you know, if I'm an electrician, you know, and all I'm doing is putting in outlets that day, what do I need? I need a screwdriver, you know, I need a wire stripper, you know, and I need wire nuts. You know, that's all I need. I don't need anything else. Yet at the same time, we as humans also, yeah, I was watching a video on YouTube yesterday about this new fancy dancy wire stripper thing that does everything but cook coffee for you. You know, it's like, you know, and so like you one of the things that you do a lot when you're putting in outlets is you take ground wires and you go and you wind them all up together, you know, and then you put some type of wire nut on it. Well, this fancy dancy tool goes and takes all those things, winds it up for you, and cuts it to the appropriate length, and goes and puts the wire nut on for you, and it does all that for you. You don't have to do anything other than stick the wires into the thing, you know. And it's like, do you really need that? Does it really give anything to you? And I know it's kind of like that's a very tangential thing to be talking about, but at the same time, I'm bringing it up because I think we do that with trading sometimes. The next thing you know, we've got 45,000, you know, indicators across the screen, and we're trying to read all 45,000 and pick that perfect entry. Forget it. You're not going to pick a perfect entry. You know, so like I was telling you, working on this, you're working on this new method, and I was playing with it today, and you know, and I got beat bad on it. And I'll guarantee you, it's from 9 times out of 10, it's something I'm doing wrong, something I'm complicating at. You know, and what I really need to do is just sit back, look at what it is, and just play it for what it is. You know, and instead of, I found myself doing all these crazy things, you know, adding in all these other indicators that I've used in the past, and squigglies even, you know, and it's like, what's wrong with you? What are you doing? Keep it simple, stupid.
Yeah, in case the traders are wondering what we're talking about, let me see if I can, let's see, there's an HL5. Let's see, turn off false. What I'm doing is just looking at the bar 2 high and low, and then taking a breakout off of that. Let's see. What is this one doing? Oh. Okay, high, low, close, previous. Oh, that's the previous day. Let me do something here. I already have it as a set. Okay. So let's load. Do I have that as a set? Nope, I guess I don't have that one as a set yet.
Well, just so you,
I'll have to do it tomorrow. We're almost out of time. As fast as 15 minutes in trading. But basically, is you just look at bar 2 and you look for breakouts. So if as price is moving up, you look for it to break short. As price is moving down, you might look for it to break long. And then, you know, you look for it at an edge, like a dynamic support resistance level or a 1, 2, 3 ball level. But it's just something I was looking at, and it was like, I wonder if there's anything to that. So you can see right here, here's bar 2. So